Hello, welcome back to another episode of VentureCast. This is the podcast for venture and investors, really, and all things growth, all things investing. And today, I think it's going to be quite an interesting chat because Sean and I have been talking a little bit beforehand about this kind of new emerging market of sports and investing. But anyway, before we dive into that, Sean, do you want to give a brief intro or who you are and what you're doing at Park Lane?
Yeah, absolutely, Dan. Thanks for having me. So I grew up in Southern California, was born in Miami and grew up in Southern California. Grandparents were immigrants. Parents were the first generation in their families to go to college. So really had the work ethic passed down there. Grew up playing baseball, so super big into sports. I don't think I had the delusions of grandeur that I would go professional in that route. So from a fairly early age, I started thinking, is there a way to work in sports? So I went through different iterations of that in my mind, whether that was, did I want to be a sports agent? Did I want to be part of the kind of young wave of upcoming general managers and pro sports team front offices that was part of the rise of sabermetrics and Moneyball that I'm sure a lot of people have heard of since Brad Pitt was eventually in the movie. But then when I went to Cornell in New York, really the on-campus recruiting around investment banking, consulting rose to the forefront. So I started to learn more about investment banking as a career and saw some examples of that being a great springboard into a wide range of careers, including sports. I saw a couple examples of whether it's team owners or team presidents or general managers that had an investment banking background. So I thought that was super interesting to sort of be at the center of the action in a really competitive space, doing deals that are impacting the markets and creating headlines. And so that's really where I wanted to pursue to start my career. Figured that would take me to Wall Street in New York, but ended up coming back to the West Coast where I grew up. I had some between internships and job experience. I spent some time in wealth management, corporate FP&A, at a small law firm. And then when I found Park Lane, I didn't even realize that there was kind of this intersection of investment banking and sports. I'd only heard of industry groups like, consumer or energy, oil and gas, et cetera. So when I found the sports angle there, I thought it seemed too good to be true. I thought it would be super competitive to break into. But, fortunately, I was able to get a role there at Park Lane. And from being an analyst early on, rose through the ranks to associate, vice president, director, managing director, which I am now, and became a partner along the way. So yeah, happy to talk more about it and share more about the industry and our firm and all that good stuff with you today.
Yeah, awesome. No, well, it's really great to have you on. And I like the baseball background. I'll be honest, I know absolutely nothing about baseball aside from Moneyball. Amazing film. I really want to read the book as well because that's meant to be equally awesome. But it must be pretty cool, like finding something that you love growing up and then actually finding like a career in that as well and being able to exist in as you say, the intersection between like sports and investing, right?
Yeah, absolutely. I like to say that I can immediately get out of bed and relate to the deals that we're working on. It's a passion. If I were working in another industry group, I might have to get smart on something like a nano chip and that kind of thing, which I don't consume in my free time. And the reality would be that I would still be consuming sports content, news, business in my free time. So to dovetail that within my role, it just makes it that much more fun and makes it really easy to be passionate about what I do and come to work every day, excited to work with our clients and to deliver results.
Yeah. Awesome. Okay. I mean, we'll get into a little bit of like deals and stuff in a bit, but do you still work with guys in baseball specifically? Have you got any baseball companies?
Yeah, so we're sport agnostic.
Right.
We've worked in the major US leagues, so NFL, NBA, Major League Baseball, and the NHL, Major League Soccer. We worked in European football, action sports, rugby, lacrosse, golf, really you name it. So there may be a year where we do a couple baseball deals and then maybe there's a bit of a lag before we get the next one. We're really bullish on a lot of the different leagues. And so, yeah, I've been fortunate to work on several baseball deals during my 16 years at Park Lane now.
Yeah. And what does the sports market look like, and how did this kind of come to be? Because it's probably been publicized a bit more in like recent years. A lot of sports, obviously like football ownership is like the big one that's very easy to understand. But we've seen, ownership, investing, moving across a load of different sports, right? So what is the sports investing market look like, and how did it come to be where it is at the moment?
Yeah, absolutely. I think the market's been around for decades.
Okay.
Park Lane started in 2005, so we've been around for 20 years as a firm. But really, since the pandemic, it's exploded, and the dislocation of the pandemic created a number of things. You often hear that the pandemic accelerated changes that needed to happen within industries, and that's our view with what happened in sports. So a lot of teams, leagues, colleges, universities, athletic programs, they may run break even, they may lose some money. Some are fortunate to make money, but on the whole, there are a lot of sort of break even businesses there, if not a little bit below break even. So the shock to the system from the pandemic created a lot of need for capital. Seasons for some sports were getting canceled entirely, others were being reduced. Games were being held with no fans in the stands. Media rights and sponsorship contracts were needing to be renegotiated. The force majeure element of contracts, I think we all heard 100 stories about that. So, as a result of that, some of these leagues, teams, enterprises, organizations had to go to the market to seek solutions when they hadn't been in position to do that in the past. In sports, we like to say that typically it's an industry that is a little bit slower to adopt trends.
Okay.
And so that, that's one example is the capital markets. There hasn't traditionally been a whole lot of liquidity, and there's been a little bit of trepidation around taking on capital partners, whether it's on the equity or debt side. I think there's maybe some suspicion there. I think there's some disclosure concerns. A lot of, these organizations don't want, their numbers being out in the public, and their businesses are a matter of public interest. So if your team is losing on the field, your fans are being very vocal about that. They want to know why. They want to look under the hood. And I think taking on external partners has always brought a little bit of risk in that regard as well. But, 2020 happened, and a lot of these firms kind of turned the page and embraced the new reality. And so over these past 5+ years, you've seen a lot of firms coming to the market as institutional investors entering sports. It's an asset grade investment class, so the numbers really work. The enterprise values have been rising and rising to the point where it truly does move the needle now for even really influential institutions. And on the issuer side, they have the demand for the capital. So it's been a process in getting the rules and regulations in order to where everyone's comfortable. I think there had been some concern around maturation times or exit timelines from, if you have a 5 to 7 year fund, teams and leagues don't want their owners to have a shot clock on when they have to exit. They want it to be more of an evergreen investment. A lot of them have leaned more toward minority investment, so these funds don't have control, so that continues to reside in more of a family-owned context or high net worth individual. And then there are regulations typically around how many teams in one league a private equity firm can invest in. There's typically a cap, as well as a cap on a percentage that they can hold in a team. Maybe it's 20 or 25%. And so on. So those, there's a bit of a first mover kind of follower dynamic where leagues have surveyed the landscape, looked at their peers, what they're doing, and more implementing a system now to welcome that. And as a result, we're seeing the real proliferation of more firms coming to the fray as well, and essentially applying for approval to invest in these leagues.
And what is the because as I'm thinking about what a sports team is or what a sports league is, you've obviously got the sports itself, as you say. There's all the merchandise, there's media, there's a big part of it is just the brand itself is
Right.
something that maybe is a bit intangible, but there can be a lot of value in that.
Sure.
So what is the kind of investment case for investing in either a sports team or a sports league? Is it something that cash flows? Is it something that increases in value over time?
It's more the latter. Okay. It's always been an appreciation play to invest in sports. When valuing teams, the industry norm is to use a revenue multiple rather than an EBITDA multiple for valuation. And that's just because historically a lot of teams have either been break even or losing money. There are exceptions to that. In the NFL, for example, a lot of teams make money, so you could look at an EBITDA multiple as a different valuation methodology as well. But really, what's driven the rise in valuations in sports has always been media. And as we go forward, as we're folks are cord cutting, cord shaving, the last real bastion of live entertainment is sports. And so that's why you continue to see a premium paid by rights holders for those rights to those different sports leagues and promotions. There's a need for content. There are 24/7 sports channels, so they have a need there. And it's really one of the last things that you see people gathered around, whether it's at home, at a restaurant or a bar, to watch and consume. And so that's why you see these rights fees continue to jump, even as they get split between traditional linear broadcast, streamers, etc. It's not all held with one partner. It could be 4, 5, 6 or more. So it's definitely changing and evolving, but the values continue to be at a premium. And that's why you see these sports team values, league values continue to break records, it seems like every month.
So where does Park Lane kind of like fit into all of that? As you say, like you're sports agnostic, but what's the goal in fitting into the sports market?
Yeah, so we have a number of different strategies internally. We have a mergers and acquisitions department. We have a merchant banking or capital raising platform. We work with asset managers to do third-party marketing. We also do secondary trading. The first two of those are more of our legacy businesses that are tied into the sports industry. I oversee our mergers and acquisitions department. So that's running sell side and buy side mandates for clients in sports. And that could be with leagues, with teams, it could be financing. We do valuations under that banner. We do consulting and business development as well. So really what we're doing is helping folks to find capital solutions, find investment partners, find exits, buyers, etc. And so we're helping them to tell their story, to package their information, to hear what their goals are as far as timeline, as far as what does a partner look like and the profile there, make sure vision's aligned, getting their materials in place, making sure we're good to go from a compliance standpoint, and then running kind of a full traditional investment banking process. It can last anywhere from 6 to 12 months, sometimes longer. And then to use a sports analogy, we like to say one of our main goals is to get our clients at bats, or shots on goal.
Right. Yeah.
Just to get them in front of folks, to really get a sense of what the market will bear, what the interest levels are, what the universe of prospective partners looks like, and then hopefully achieve an outcome that's a win-win for everybody.
What's like the biggest, what's the biggest like challenge, I guess, that you guys face? Is it, as you say, more? What was the phrase you used? Getting hits on bat, or getting
at bats or shots on goal? Yeah, either one works.
Shots on goal, yeah, that's the one I would recognize. But
yeah, for sure. I think it's definitely an evolving industry, as we said. So the competition has grown for us. When I started, there were probably 4 or 5 boutique investment banks with a meaningful sports practice, and maybe 4 or 5 of the large bulge bracket firms that had a sports practice. And now, years later, that's probably doubled in each of those buckets, plus a sizable group in kind of in the middle of mid-sized firms. So for us, there's more liquidity in the market, there's more activity in the market, which is great, but it's just still continuing to get our brand out there, getting in front of folks, being able to pitch on opportunities and deals, and communicating our value and what separates us, and getting that business. I mean, at the end of the day, our goal is just always to do good deals with good people, and each year we strive to improve upon that. So yeah, in a really evolving landscape with more people coming in and looking around, it's just about continuing to separate ourselves, continuing to deepen our brand recognition in the market, and continuing to be a respected, established player in our industry.
Yeah. So what does differentiation look like? Is it in the deals that you do, or the network that you have, or maybe you can like walk through what a deal typically looks like?
Yeah, so sure. I mean, how we differentiate ourselves, I would say it's a couple things. We're a small team. We wear a lot of hats. We like to say we punch above our weight class. What you see is what you get with us. So if we're in pitching on a deal and we win the deal, the team that's going to run the process on the deal is the same team that's pitching. You aren't going to, as a client, you aren't necessarily going to be passed around to a different person or lead. Our network, by all means, is kind of the lifeblood of our business over 20 years. Yeah. It's meeting sports team owners, family offices, billionaires, folks that are interested in investing in sports. That certainly is a differentiator. I think our culture and our fit, a lot of us are former athletes, former military. So I think we relate to people pretty well in the space. So that's part of how we pitch and position ourselves in the market. Just in addition to our track record, and a lot of entrants to this space are newer. Maybe they came from a TMT group or more media focused, whereas we've had this sports pedigree and nuanced understanding for decades now. So as far as what a deal looks like, the saying goes that deals are snowflakes. Everyone's unique, but there's certainly a few examples that always stick in my mind of challenging processes or twists and turns that you couldn't write if you wanted to. So happy to dive into one of those. It might be a bit longer of a story, but we were hired by a Major League Baseball team to bring it back to baseball again. To sell one of their assets, which was one of their minor league affiliates, so a minor league team. And this team, they were playing in a stadium that was 70, 80 years old, really needed significant renovation or maybe construction of a new ballpark. And the team at the major league level had a lot of financial and bandwidth commitments ahead of it that really they thought it made sense to bring in a partner or a new owner, potentially with a real estate background to take on the future of that ballpark, that team, et cetera. So they hired us on, I believe it was early 2019 to launch a process. So we did that. We went to our network. We found an interested party that owned a different minor league baseball team, was looking to kind of expand their portfolio of minor league baseball teams. And we signed a term sheet late in 2019. And so there are a couple things on the horizon. I think we all know what the first one was, but the second one was a rumored reorganization or restructuring between Major League Baseball and minor league baseball, where teams going to be contracted, minor league teams going to be contracted by Major League Baseball, what was the future of the sport, et cetera. So the interested buyer at the time had asked to have a longer closing timeline so they could see where the dust settled as far as that restructure. And our client really was strong-minded about kind of the golden rule and being a good partner. It's one thing that we always take away from that deal and that client that sticks out that we live by as well. And they said, hey, let's do that. Let's honor that. We're fine with a longer close. We think we found the right partner here. Let's do it. Obviously, in early 2020, pandemic hits, the entire minor league baseball season gets canceled. So those teams were hit hard financially. It was a really tough time. But both buyer and seller stuck in, were committed. And they said, let's see this out. Let's continue to wait and see how the reorg plays out. Sure enough, when that came through, Major League Baseball was essentially taking over the league office at minor league baseball, the management and leadership of minor league baseball organization, et cetera. And they also contracted 40 teams out of 160. So obviously a big chunk of teams were no longer playing affiliated minor league baseball.
Yeah.
And so that was a real jolt. And specifically the buyer that was lined up, their team was adversely impacted in that restructure. And so that really changed everything for them. They had to reevaluate, what do we think about this industry? Do we want to acquire more teams? And they ultimately opted to kind of take a step back, which was tough for us because we had spent so much time invested in getting to an outcome, and everyone was really optimistic on the partnership. But our client was great, and so we sort of got our bearings and we relaunched the process. And despite some of the bad luck that we had there, we had some good fortune as well. There was a group emerging, an institutional investor actually that's coming out of the pandemic. We're talking about that trend. And they were looking at acquiring a group of teams in strong markets with strong Major League Baseball affiliates. And they ended up acquiring our client's team and closed that deal as part of their first group of acquisitions in the space. And now they've gone on to acquire more teams, and they're arguably the most influential owner in minor league baseball history. It was a league record sale price. I think all in, it was more than 2.5 years of a process. So certainly not
sounded like a long time to turn it around. Yeah.
Yeah, absolutely. So not something that you draw up by any means, but we're fortunate to have a great client who is committed, who is loyal and patient. And we try to be all those same things and continue to have a great relationship with them. They're a really important relationship of our firm. So I was really happy to see a great outcome for them and continue to follow that team since. And definitely an exciting one despite all the twists and turns.
Yeah. Yeah. Wow, I mean, yeah, that's quite a story. A lot of twists and turns, and well, I mean, no one saw the pandemic coming. So, what is there? How often does sports teams like change hands and move around? I'm just curious, really.
Yeah, historically, not very often. I
Yeah,
mean,
yeah,
you may see one team trade in one league once a year,
yeah,
sometimes even once every other year. But since 2020, that's certainly picked up. I think the dynamics changing a bit, whether it's things like gambling, gaming and betting, real estate. A lot of teams are hubs for real estate development and a lot of value is driven there. So some owners are looking at the landscape and saying, this may not be my core expertise. Can I bring in a partner? Maybe is it time for me to exit? Family planning, et cetera. All those dynamics come into play. With the institutions entering the space as well, there's just a lot more capital, more liquidity. So you do see more trades happening, whether
mm,
that's majority control sales or minority investments. That's happening more and more across sports. So even in the major US sports, I think we've seen 3 or 4 announcements in the past couple of weeks, headlined by the Lakers selling majority stake for a $10 billion valuation, which is the highest team valuation of all time in any sport, in any market or territory.
yeah, yeah. Wow. And is it something that you predict is gonna like keep increasing and keep growing? Like, what is next for sports investing?
Yeah, I think you hear people talk about, is there a media rights bubble, and does that mean there's a
Yeah,
sports team valuation bubble? And the truth is, more broadly across the market, there just hasn't been any proof of that happening. The valuations have continued to rise. Sometimes the growth rate has slowed in different macroeconomic cycles, but by and large, they're like pieces of art. They're trophy assets. People are willing to pay a premium for them, and we're continuing to see that. I do think there's a question around as these valuations get to 6 billion, 8 billion, 10 billion, 12, 15. How many individuals or families can write those checks as the lead owner? And do you have to start thinking about, will institutions take majority stakes? Will sovereign funds enter the space more? I know in European football, that's a prominent trend that we've seen in recent years. But we don't see the valuations slowing down or the rise stopping. I do think on the media side, questions are being asked about some of the rights holders paying these fees. Can they support that? Or do they have to reshuffle from an infrastructure and staff standpoint after paying these large fees? Do they have to divest and move around from a corporate structure standpoint to continue to pay these fees? But the reality is, you're still seeing teams trade. You're still seeing a lot of activity and interest in the market, high demand, and so we're certainly bullish and happy to be in a space with this kind of activity and these kinds of valuations.
yeah, yeah. Nice. Okay. I mean, I've definitely kind of seen, I guess, like things similar to what you're describing with the media, just like playing out a little bit. I think one is uh, follow cycling quite a lot,
Okay.
and there's a particularly big like cycling YouTube channel that kind of got absorbed by, I think it was by Eurosport or someone. So they
Uh-huh.
kind of did a load of cycling based content, but then also showed all of these races. And they built this dedicated platform where you could live stream basically every single like pro cycling race, could live stream them all from this one platform that
Yeah.
was like the skin version of Eurosport, I guess. But it was also ridiculously cheap as well. And it was like,
Right.
how is this thing? Is it going to be maintained? And it was around for about a year or two, and then the rights went on, and they went on to Discovery or whoever it was that kind of owned the media rights. But yeah, it just kind of it makes you think. It's like, okay, there's a lot of competition. There's a lot of demand here. Clearly, there is. And it's like how niche down can you get to support like coverage over one specific sport, or does it all need to be wrapped up into like larger things?
Right. I mean, I think there's a couple of factors at play, and talked a little bit earlier about these networks that have programming that they need to fill and content. And
Yeah,
so you are seeing more emerging leagues take a bigger share of the market, whether that's things like pickleball, volleyball, even cornhole. You're seeing, on TV. Rising tide lifts all ships. I think that's proving out in this case, and we've certainly seen a lot of interest in emerging leagues and emerging sports, and we spend a lot of time there. So yeah, to your point, it's not just going to be sort of the old juggernauts that have been there, front and center for 100 years. It's just going to continue to spread, and more folks are going to join the party essentially.
yeah, yeah. Awesome. Well, are there any other trends that you see in the space just before we wrap up? I don't know how AI fits into all of this, if that's like if that's a thing in sports.
Yeah, for sure. That's a question, and as I said, sometimes sports can be a bit slower in adopting, and they can kind of latch on to what's been going well historically. So AI is something that's certainly arriving into sports. I think it's still a bit fragmented, and there's still a need and an opportunity for more players to enter the space. So that's something that we're bullish on and spending quite a bit of time on. We talked about college sports, athletic programs. There's been a lot of speculation about opening the doors to outside investment there. So, we were early on that in 2020. One of our
Mm.
clients is an institutional investor that took a long look, and the industry just wasn't really set up or structured the right way yet. But steps are being taken now, and you have NIL and you have different government rulings being passed that are opening things up. So it's really starting to come into effect now. So that's a big one that we're tracking. So yeah, those are a couple of the trends. I think people wonder about crypto and the bounce back there after a bit of a pause in the
Mm.
sports industry. So something that we're tracking. But yeah, I think there's always a lot to follow, and we're always kind of evaluating the trends and seeing where we can come in and be helpful and answering clients' questions on those topics when we can.
Yeah, yeah, nice. Well, I've really enjoyed the chat. I think it's I've learned a lot, that's for sure. Just about like how all of these things work and kind of what the opportunity is and how the market dynamics are really changing around sports.
Yeah.
So yeah, thank you for sharing everything, Sean.
Yeah, it's been a pleasure, Dan. Great to spend time with you, and we're lucky to be in this industry, like I said, and so we certainly can't wait to see how things evolve going forward.
Awesome. If anyone wants to reach out, what's the best place to find you? Is it LinkedIn? Is it website?
Yeah, I'm on LinkedIn, so people can find me there, and our website is Parklane, is prkln.com, so Parklane with no vowels. You can find us there and learn more about the kinds of transactions that we do and how we bring value to the market.
Awesome. Well, thanks again for your time, Sean, and thank you everyone for listening as well.
Thanks, Dan.